Hey guys, it's that Dividend guy coming at you with a new press release for Realty Income. So this is my favorite real estate stock, and so I got a notification that they are doing a merger with Variant, an all-stock transaction. So it's an all-stock transaction expected to generate 10 plus accretion to annualized AFFO per share, enhance size, scale diversification, and synergies to drive future growth and value creation. Expect to spin off assets and dedicated portfolio of office properties. Conference call to discuss the transaction to be held at 8 a.m. Eastern Time. San Diego and Phoenix, April 29, 2021. Realty Income, ticker symbol O, Realty Income, the monthly dividend company, and Variant, ticker symbol VER, today announced that the two companies have entered into a definitive merger agreement by which Realty Income will acquire Variant in an all-stock transaction, creating a combined company with an enterprise value of approximately $50 billion. Under the terms of the agreement, Variant shareholders will receive 0.705 shares of Realty Income stock for every share of Variant stock they own. That is awesome. Immediately following the closing, the companies expect to officiate a taxable spinoff of substantially all of the office properties of both companies into a new self-managed publicly traded REIT SpinCo following the merger and spinoff. Realty Income will continue as the surviving public entity. Realty Income, the former REIT shareholders, are expected to own approximately 70% and 30% respectively of both Realty Income and SpinCo. The transactions are expected to be over 10% accretive to Realty Income AFO per share in year one, add meaningful diversification that further enables new growth avenues, strengthen cash flow durability, and provide significant financial synergies, particularly through accretive debt refinancing opportunities. Realty Income's growth strategy will remain focused primarily on high-quality, single-tenant net lease retail and industrial properties in the U.S. and U.K., leased to clients that are leaders in their respective businesses. We believe the merger with Variant will generate immediate earnings accretion and value creation for Realty Income shareholders while enhancing our ability to execute on our ambitious growth initiatives. Together, our company will enjoy increased size, scale, and diversification, continuing to distance Realty Income as a leader in the net lease industry. Variant's real estate portfolio is highly complementary to ours, which we expect to further enhance the consistency and durability of our cash flows. The objective of our management team from the initiation in 2015 was to revitalize Variant and increase the value of the enterprise. We put an excellent team in place, enhanced the portfolio, created an investment-grade balance sheet, and resolved all legal issues. The board and management have concluded that a merger with Realty Income, the premier net lease company, will enable us to recognize the value created. The combined company provides all of our constituencies the opportunity to benefit from the advantages, cost of capital, and growth potential generated by the transaction. Immediate AFFO per share accretion relative to the 3.465 midpoint of Realty Income's 2020 AFFO per share guidance. The transaction is expected to be over 10% accretive to shareholders on an annualized leverage neutral basis. Increased diversified scale driving growth. The complementary nature of each company's real estate portfolio results in greater diversification for client credit, industry, and geography, providing further runway for Realty Income to grow in its chosen verticals with best-in-class clients without compromising prudent concentration metrics. Enhanced leadership amongst blue-chip benchmarks. Upon closing the merger, Realty Income is expected to become one of the 6 largest REITs in the U.S. REIT Index RMZ by equity market capitalization and among the top half of the constituents in the S&P 500, resulting in increased weighting in major benchmark equities indices and further growing its net lease industry leading trading liquidity. Dividend stability. This one's the real important one. Realty Income is one of the 3 REITs in the S&P 500 Dividend Aristocrats Index for having increased the dividend every year for the last 25 consecutive years. And improved diversification effectuated through the merger is expected to further enhance the durability of Realty Income's dividend coverage. REIT shareholders are expected to experience an immediate increase in the dividend upon closing of the merger. Dividend payments for both companies are expected to remain uninterrupted through the close of this transaction. A fortress balance sheet and continued credit leadership in the net lease industry. Realty Income is currently the only net lease REIT with an A3/A credit rating from Moody's, and S&P intends to maintain target leverage as defined by the net debt preferred equity adjusted EBITDA are in mid 5x area. Upon closing on the merger, Realty Income's enhanced scale and diversification are expected to be credit positives. Cost of capital advantage is amplified. Realty Income's cost of capital advantage is driven by its superior credit ratings and net lease industry and the historical premium to NAV, which allows it to consistently grow AFFO per share while assembling the best-in-class real estate portfolio. Post-merger, shareholders are expected to benefit from the cost of capital advantage applied towards the broader set of growth opportunities across its combined investment pipeline. Attractive, and I'm not going to go through all of it because that's a lot, but let's take a look at the end here. Total portfolio analyzed contractual rent is expected to be approximately $2.5 billion. Approximately 83%, 14%, and 3% of total portfolio analyzed contractual rent is expected to be generated from retail, industrial, and other property types, respectively. Approximately 45% of total portfolio analyzed contractual rent is expected to be generated from investment-grade clients. The 10 largest clients are expected to be Walgreens, Dollar General, Dollar Tree / Family Dollar, FedEx, 7-Eleven, LA Fitness, Walmart, Sam's Club, CVS, Salisbury, and BJ's Wholesale Clubs. The 10 largest industries are expected to be convenience stores, grocery stores, dollar stores, drug stores, restaurants, casual dining restaurants, quick service, health fitness, home improvement, theaters, and transportation services. Realty Income expects to maintain leverage as defined by net debt by $3 billion unsecured revolving credit facility and $1 billion commercial paper program. I'm not really going to go into what the variant people get because that's not necessarily going to affect me. But let's take a quick look at some of the tenants because they said that they have some of the same tenant base, which honestly, I was looking into that REIT beforehand because when I was actually looking into buying Realty Income, that was one of them is a triple net lease. So they actually run the same type of business that Realty Income does. So let's take a quick look and see what exactly we get. So let's jump into their portfolio, the very sorry if I'm pronouncing that incorrectly, but they have 3,831 properties, $14.6 billion of total real estate investments, 89.5 million square feet. And of the property type, they are actually structured a lot like Realty Income. So you're getting a very similar company here. So I'm not surprised to see them actually buy out this REIT because they operate in a lot of the same categories. 45.4% of the portfolio is in retail, so nearly half of it, which is exactly how Realty Income is set up as well. Restaurants is 20%, which again, Realty Income owns some of that as well. 17.7% is industrial. 16.5% is in office, and then 0.01% is in other. So the office properties are going to be spun off into their own company, but everything else really does line, because that honestly is kind of against what Realty Income is about. They're more high grade tenants, and I don't think offices are really something that they're interested in, so it makes sense that they're spinning that off. But they have 639 tenants in 41 different industries. Investment grade tenants, 38.7% are investment grade tenants, and 61.3% are not rated or non-investment grade rated. Let's take a look at their portfolio. And again, some of these are similar to what Realty Income owns. So first is Red Lobster with 4.8% of the portfolio. Big restaurant. Dollar Tree / Family Dollar is 3.6%, which I believe Realty Income owns that as has rent paid from them as well. Dollar General is 3.2%, which dollar stores are phenomenal. Discount stores are great in any economy, so that's great. That's awesome. Walgreens is the biggest rent payer that Realty Income has, so that will boost their presence with Walgreens. FedEx, a really good company, huge with logistics, and they're very, very good company. Then CVS, this is one that I wished that I saw more of with Realty Income, so I'm really happy that they've added to this. 2.6% of their portfolio is in CVS. Next is BJ Wholesale Club. This is kind of like a second Costco. They operate the same way. They're big wholesale. People buy in bulk, and they have a great loyalty program, kind of a lot like Costco. Next is LA Fitness at 1.9%. Albertsons at 1.7%, and then PetSmart at 1.6%. So really here, we do have a good array of companies. Like I said, Dollar Tree, Dollar General, Walgreens, FedEx, and CVS, as well as I think LA Fitness as well. So they own 6 of of the top 10, I believe, are companies that are already paying Realty Income, so they will just be added to their list. But these are really good tenants. I'm happy that we're getting these added to our portfolios technically as Realty Income shareholders. So good for that. Good for the company. Good for us. I think this is really going to help. I love CVS, but out of all of them, honestly, I think that the Dollar General and Dollar Tree bump ups are really going to be the biggest growth drivers for us as Realty Income shareholders. PetSmart's pretty cool too. I'm pretty happy to own a pet store, or actually a pet store to be paying me rent. Keep in mind, guys, the big advantage that we have as shareholders here is we're getting these for free. Think about it. We're getting all of these properties now paying us rent, minus the what was it, 16% that is office properties. But these are phenomenal tenants. So we're getting Red Lobster, Dollar Tree, Family Dollar, Dollar General, Walgreens, FedEx, CVS, BJ's Wholesale, more LA Fitness, Albertsons, and then we have an added of PetSmart as well. So I'm really happy with this, guys. This is literally like Realty Income buying a smaller version of itself. It has the same business model, relatively the same tenants. They're getting rid of the portion of their portfolio that doesn't fit their investment thesis or their goals. So it's phenomenal. They have a 91% occupancy rate. Their weighted net lease is 8.4 years. They're in 49 different states. That's phenomenal. They're a really well put together REIT. I'm really happy that we bought this as Realty Income shareholders. So guys, congratulations. No, this is great. This is just gonna boost. This is one of those acquisitions that actually makes sense. A lot of times companies just buy other companies. It doesn't make sense. They're adding to quality. They're adding to some of their top 10 quality customers or I guess rent payers with this deal. And to variant shareholders, welcome. You're getting bought by a phenomenal company. You get paid monthly here at with Realty Income. So really excited to have the assets added in our under management and have those properties pay us more rent. Thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. This is such awesome news. This is the coolest and probably the smartest acquisition I've ever seen a company do. As long as I've only been investing for like 3 years, but this is definitely the most direct, I think, the most beneficiary acquisition I've ever seen. So thank you guys so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification so you don't miss any updates. I post updates on my Robinhood portfolio Monday through Friday, and I do a list video every day as well. Thank you guys so much for watching, and I'll see you guys in the next update. Take care, guys.